Hi, this is Zak Mir with the Bulletin Board Heroes here at Box Markets for Tuesday, the 21st of February. Starting off with the FTSE 100, where we were hoping that 79.50 old resistance would hold, and above that looking for 8200, and so far that's what we've got. We had a good hammer candle there on Friday, and almost an identical candle to that one for today. That suggests that we just need to break through the 80-20 area to get a fresh leg up towards that 8200 price channel top target from back in September. Below 79.50, probably the worst we're looking at is 78.20 at the floor of the channel, and you've got the 50-day moving average well below there at 7700. We haven't had to test that for support since the beginning of November, which is quite an achievement. Moving on to the DAX, and here we're not quite such a smooth ride as the FTSE, but still holding that 15,200 area, the initial gap up level for February, and also the old January resistance. Above that, looking for this index to oscillate up to 15,600, and recent highs through 15,600. The best on the upside could be 16,500 by the end of next month if we hold above that 15,200 zone. Moving on to the Dow, where it's been in the consolidation mode for quite some time. Here, the 50-day moving average 33,600 and resistance area 34,300. We're waiting for an end-of-day close outside that area, and if we can do that, then it would be the top of the channel there up towards 36,000, which in fact 36,300, which could be the target by the end of next month. RSI a bit strange, just oscillating either side of the neutral 50 level, but that is okay. And the 200-day moving average starting to curl up, which may be the trigger for a new leg to the upside. Still waiting for Bitcoin to have its big new move. We had obviously the rally up from 16,000 to 25,000 basically. Next, a rally hopefully would be from around 24,000 to 31,000, which is the top of that broadening triangle there from back in June. And if we can get that by the end of next month, I think we'd be pretty happy. At this stage, only really back below the 50-day moving average, 21,500, really delaying the upside scenario, or at least the recovery scenario. On to the stocks, and first one is Aurrigo International, which is obviously rather obscure, but interesting chart here, which is going up in step fashion, which is the most bullish trajectory you can see on a chart, I suppose apart from a vertical line. Here we've got a rising trend channel there from September, top of the channel heading towards £1.70, and we're looking for that at least while we hold above the £1.10 area. That's probably the best stop loss. I'm guessing that the spread on this stock is not exactly very tight. On to the quirkily named B90, which has made progress through the 200-day moving average. You've already had an unfilled gap to the upside through resistance, which was December resistance around 4 pence, and above that we were looking for 6.5 pence, which looks as though it could be delivered over the next week or two. In fact, the target there may be a little bit higher, 7 pence, depending on exactly where you draw that top of that triangle, but 7 pence over the near term after all the bullish divergence and everything else that we've seen. We've got a rising 50-day line, and hopefully the 200-day line will join it after that unfilled gap to the upside. On to Cizzle, which hasn't really lived up to its name until the recent past, or at least 2023, I suppose. Here we've got this, looks like a V-shaped bull flag heading towards our initial target here, which was 2.2 pence. Above that, on an end-of-day close basis, or a weekly close basis if you're fussy, then we could get up to 2.8 pence by the end of next month. On to a stock which has been coming up with good stuff on the fundamental front over recent weeks, still in the consolidation, at least until right now, where it looks as though we're finally breaking through the old 2023, initial 2023, January 2023 resistance, and through that at 2.15, we're looking for 3 pence, either at the top of that channel from October or the top of a broadening triangle from last April. So hopefully 3 pence by the end of next month on Empire. On to Harland & Wolff, which so far this week has had an RNS a day, which is obviously nice to keep in touch with investors. Here the plus points are that we've managed to remain largely above the 200-day moving average on that rather steep retracement that we had from November's peak. If you're a fan of the shares, you're probably already looking for a dip, or this dip, to buy into at the November support line, and hoping that there won't be any end of day close back below 13.5 pence and the 200-day moving average. If you're looking for a momentum trade, probably waiting for a break either of the 50-day moving average at 17.75 on an end of day close basis, or the 19 pence level, which is the top of that converging triangle. It should be a continuation pattern anyway from November. Top of the channel there, heading for 31, 32 pence on a 1 to 2 month time frame. Obviously, we want to see that trend line broken first, but the steady situation there at Harland and Wolff. Stock which gets probably too much coverage here is Ilika. Here we're back again with in the aftermath of that break through the 50-day moving average at 33 pence. We managed to spike up towards 70 pence, which was basically post-summer resistance. Current situation is that an end of day close above the 200-day moving average at 54 pence could not only get us up to retesting the highs of the year to date at 70 pence, but even take us up to 90 pence as soon as the end of April. So maybe a 2 to 3 month view there on Ilika on the upside. This stage only well below the 50-day moving average at, well, wherever it is over the near term, but below the 50-day moving average at 41 pence, really questioning the bull scenario there. Another stock which had a little run of late and then is trying to consolidate is RUA, and here we've had that rather large unfilled gap to the upside. We hit our 60 pence target, looking for basically a break of a line of resistance from the end of last month. That is around the 63 pence level, so an end of day close through that should get us up to 75 pence, ideally by the end of next month. Upland Resources, market seems to have caught up with the enthusiasm of the RNS yesterday, or at least the merits of the RNS. So we've gone through the 50-day moving average as we were hoping to do that rising 50-day line and heading towards hopefully 1 pence, which is the top of that rising trend channel from back in July, and the upside valid at least while we're above the 0.5 pence area. Just a few stocks to go now. First one is UK oil and gas, where the market has responded to the news today and the CPR news, and basically what we need to do here is break through the 200-day moving average at 0.09 to give us a target up to 0.15. Obviously, if you look back at the history of the shares, every time there's a decent spike, it's sold into, but maybe this will be the turning point. So above 0.09, looking for 0.15 over the next 1 to 2 months. Even if we then fall back again, we've got the support of a rising RSI support line there, or uptrend line there from back in November. A couple of stocks to go. One is Zoo Digital, which has been in a consolidation pattern, a bit like the one we saw at Empire Metals. Here you can see that above the £1.60 area, we're looking for the shares to head to the top of that rising trend channel from July 2020 as high as £2.40 over the next 2 to 3 months. So that looks pretty well set fair. And finishing off with Zinnwald, where we have a situation where there's shares have hit our initial target there around 8.75 pence, above that line of resistance from October, around 8.75 on an end of day close basis. We're looking for a new target there as high as 12 pence at that parallel resistance line there from back in May, and 12 pence maybe by some time in April for that situation. It's quite key that we've broken through the 200-day moving average at 8.3 pence, and above that certainly looking for the upside. We've also got a bullish divergence line there, which has helped the turnaround and gives more gravitas to the idea that we can head up to 12 or 13 pence by the spring. That's it from me today. More updates tomorrow.